Good morning to all, and welcome to the 21st Annual Kansas State University Beef Stalker Field Day. I'm Wes Ishmael, a contributing editor to Beef Magazine, editor of Cattle Current, and a longtime fan of this event, having had the opportunity and pleasure to attend for many years. If you've visited the K-State Beef Stalker unit before, where this field day is usually held, then you know this. If you haven't visited yet, you'll discover this. The K-State Beef Stalker unit, led by Dr. Dale Blasi and managed by Bill Hollenbeck, is not only a jewel in the crown of Kansas State University and Extension, but it's a treasure for the stalker producers across the nation, with ongoing sector-specific stalker research conducted in the real-world setting of the storied Kansas Flint Hills. Chances are, each time you visit, you'll see something new, as the unit is constantly evolving, building, and adapting. There are right at 500 of you joining us for today's virtual field day, and we're honored to have each one of you with us. As we begin today, if you run into any technical difficulties, please use the chat section on your screen, which is being monitored by our tech folks, and they'll help you out. As for questions to the speakers, please use the Q&A box. We'll make every effort to get those questions answered during the presentations, and depending on time, we may be able to share some of those questions and answers with the entire audience. And now, to start us out, some thoughts from Dr. Mike Day, head of Kansas State University's Department of Animal Science and Industry.
Welcome all to the 21st Annual Kansas State University Stalker Field Day. I understand there's about 500 registrants for this field day, and it's great to have you with us. I'm Mike Day, Department Head in the Animal Sciences and Industries Department at Kansas State University. You know, the one regret we have today is that we can't show you this excellent facility that's really unique in that it's one of a handful in the U.S. that targets specifically the stalker beef industry. And so if you were here last year, there have been improvements made that would be of interest to you. If you haven't been to the stalker unit, we welcome you next year in 2021 to an on-site visit. With that in mind, and I'll come back to this in a minute, when I'm finished, we'll have a video that highlights last year's Stalker Field Day that really gives you an idea of the facility. It gives you an idea of what the purpose is of the field day that we're having today. This unit is one of several that we have that support our research, teaching, extension missions in the Department of Animal Sciences and Industries. In addition to supporting the robust research programs of the over 50 faculty and 70 graduate students, we also have 1,000 undergraduate students approximately that come here to get an education for a variety of purposes. And these units are critical for that, whether they're returning to the ranch, working in an ag industry when they leave us, becoming veterinarians, or becoming the next cutting edge researcher and or teacher. These units are critical to that type of education. And finally, what we're doing today, they provide a venue, an opportunity for us to reach out to our constituents, to our allied industry, to all those that are involved in animal agriculture. With that, the success of this unit and the success of this field day doesn't happen without help from external sources. And I urge you to open the brochure, take a look at all those people that have supported the Stalker Field Day, the Stalker Unit, in terms of research or donations over the years, and have made this program a success. Dale Blasi, who supervises the Beef Stalker Unit, the organizing committee have put together a great abbreviated program given the circumstances. We're really fortunate to have Dale, one of the speakers today, Justin Waggoner from Garden City, another member of the ASI department speaking today, and Glynn Tonsor from our agricultural economics department. I think you'll enjoy the program. So as I leave, I urge you in the next few moments to just watch the video that highlights the 2019 Stalker Field Day, gives you an idea of the unit, but also an idea of what our purpose is for this field day. Enjoy the video, enjoy the education, have a good day. Thank you for your attention.
Field days have long been a valuable way for farmers and ranchers to get together, share ideas, and hear the latest updates from university researchers. Now, with COVID-19 restrictions, many of these events have either been canceled or they've gone online. In fact, the 2020 Kansas State Beef Stocker Field Day will be a virtual event this year, and it'll take place on October 1st. In the meantime, Cattleman to Cattleman reporter Brian Baxter takes a look back at the 2019 Field Day at K-State.
Each fall, over the past 2 decades, the Beef Stocker Unit at Kansas State University puts on a special field day where they share the latest research developments in the program.
The KSU Beef Stocker Field Day is an opportunity for us to illustrate the results that we have generated from our research, as well as to bring in speakers that address a multitude of topics that are relevant for our beef stocker producers.
Educational sessions during the field day touch on topics in the areas of marketing, nutrition, animal health, and technology. The goal is to give producers the most accurate and up-to-date information to help them get the best performance from their operations.
What we're really trying to look at is relevance, okay? What is impacting our producers today? What could possibly impact them into the future? And what kind of answers do we have at our disposal to help them out with that? So we try to keep them right on the cutting edge, that they have that cutting edge ability above and beyond any other producer, hopefully within the United States, which really helps Kansas beef producers really lead the way.
The producers that do attend the K-State Beef Stocker Field Day appreciate the opportunity, the exchange of ideas, the opportunity to hear cutting edge information, be it the Outlook report that's provided by one of our very own in the Department of Ag Economics. And then we also bring in a variety of topics pertaining to beef cattle health, nutrition, management aspects, all that are relevant for backgrounding and beef stocker calves.
The Kansas State Beef Stocker Field Day is our biggest event of the year. It's just our chance to get to show off what we do here. The networking's awesome. So many producers come in, you get to meet so many awesome people and get those connections and get to see what's new out there.
It's kind of a hallmark event, you know, in a 12-month period of time for stocker people that in the stocker cattle business in the state of Kansas, and some come out of state. Very seldom have I ever been here when I didn't pick up some important information.
Kansas State has one of the largest animal science departments in the United States, and the Beef Stocker Unit is one of several field research facilities at this world-renowned land-grant university.
K-State's really blessed with a whole array of livestock facilities, research facilities, on-campus lab facilities to support the research efforts. And so those centers serve research, but they also serve things like today, which is really outreach, education, and sharing of research here at the Beef Stocker Unit.
The Beef Stocker Unit here at Kansas State University is comprised of almost 1,200 acres. We have facilities to receive high-risk long-haul calves. We also have native grass pastures, which allow us to do double stock, intensively grazed studies once a year. It also allows us to conduct producer educational events and opportunities. So it's fairly close to campus, and it allows us to really accommodate our goals at Kansas State University.
I want folks around the nation to look at Kansas State University and realize that we're leading the way into the future for our beef industry to increase our efficiency, our productivity, our well-being, everything incorporated into one. That means a lot to me.
Land-grant universities like Kansas State are a key resource for farmers and ranchers to get valuable technical assistance, educational outreach, and hands-on instruction.
It's important for producers to look at all sources of information, but what land-grant universities provide are unbiased information and research reports that are generated using controlled studies in a fair environment to properly evaluate various treatments that are being
The best unbiased information sources is at land-grant universities, which is represented by professors at universities, in this case K-State, extension workers in the field. And so to me, yes, you can fact check things, but then if you want them to help sort through the garbage and the truth, those are the people you need to talk to.
From the KSU Beef Stocker Field Day in Manhattan, Kansas, I'm Brian Baxter reporting for NCBA's Cattleman to Cattleman.
You can get details on this year's Stocker Field Day by going to the website ksubeef.org.
Thank you, Dr. Day, and special thanks to Kate Maher and her crew for putting that video together for the Cattleman to Cattleman program and allowing us to share it with you today. As I alluded to at the outset, and as you just saw, if you haven't had the opportunity to visit K-State Stocker Unit, it's well worth making the time to do so. Before we begin our next segment, remember you can ask questions of our speakers, and to do so, please use the Q&A section on your screen. Also, as we begin, you're going to be hearing from some of the excellent experts at Kansas State University, but I hope you'll join me in thanking the many educators, researchers, and extension professionals at all of our land-grant universities who always answer the call, and perhaps never more so than during this pandemic, as they help everyone try to understand the impacts on different sectors of the business as the pandemic unfolds. That can certainly be said about our first speaker, who has served on a number of webinars since the pandemic began, done pandemic-specific research and co-authored articles, and etc. Here today to offer a view of the markets and what has been an unprecedented year of disruptions and wonderments, Kansas State University agricultural economist Glynn Tonsor.
Hello, this is Glynn Tonsor. I'm a professor in the Department of Agriculture Economics at Kansas State University. I'm making this recording in advance of Stocker Field Day, which normally is held in person and is being held virtually this year. I hope you find this recording and the broader meeting informative, enjoyable, and I hope you find value in it on your own operation. You will be able to find the PDF of these slides. I'm going to provide a link to that at the end of this recording, and a host of supporting information will also be available. As most of you know, I like to start Outlook talks very broad, give a quick overview of the overarching situation. So first and foremost, from a beef supply perspective, commercial U.S. beef production appears to be peaking. Note here initially, we had year-over-year gains the last several years, almost a 4% increase in 2017, 2.5% in 18, a little over 1% in 2019 compared to the prior year. Here in 2020, basically coming in flat, maybe up just barely compared to 2019. Of note is that more than offsets the decline in the second quarter. So year-over-year production in the second quarter was down over 11%. That was the COVID bottleneck, which I'm going to talk more about here in a minute. But pulling cattle forward in the first quarter and then ongoing adjustments the rest of the year is going to put 2020 beef production basically on par with 2019. Looking forward out to 21 and 2022, LMIC is projecting declines, about 1.5% decline in 2021 and maybe a full 2% decline in 2022. The real leverage and the action, so to speak, now that we're past, and I hope we're permanently past, the bottleneck on processing cattle is on the demand front. So beef demand is key to supporting prices. You've heard me say that lots of times in the past. As we're in the midst of this pandemic, I do hope the worst is behind us, but we certainly have a very mixed bag of beef demand signals. I'm going to try to break some of that down here, but that's where the bulk of the uncertainty is at, not so much on the supply side today, more on the beef demand and therefore cattle demand side of the equation. One way to draw this, a bow around this before we get into the nitty-gritty details is to look at the prices. So 5 market fed cattle prices, 2019 was basically flat, 2020 down 7.5%, 2021 looking at maybe a 10% increase. Now, of course, that is basically because of the pullback that's happened here in 2020. Keep in mind what a year-over-year change really means. Southern Plains yearling prices, 7-8 weights. 2019, we were down 3.5% compared to 2018. Here in 2020, it appears we're down about 4%, and then up maybe 8%. Nice recovery there in 2021. And then look over to calves, 5-6 weight Southern Plains series was down nearly 5% in 2019 compared to 2018. Here in 2020, maybe down only 3% or less. We'll see that in a chart here in a moment. We've had a nice bounce back compared to earlier April price lows, at least in terms of projections for fall prices. And then out in 2021, 5-6 weights looking to be up about 6% compared to 2020. All those numbers reflect LMIC forecast as of September 15th. I want to interject here a summary, and I've done this in a lot of other venues, but some of you may not have seen some of those recordings in other webinars, but there's at least 3 major shocks that the COVID pandemic has put into the U.S. beef cattle industry. I think that's important to understand. The first shock is the stay-at-home orders. So I've put here a timeline. It covers the month of March into early April, and the bulk of the residents, because of population differences in the majority of states, but not all states, implemented some versions of stay-at-home orders as we went from March 18th. March 19th was California started this sequence. South Carolina was the last to implement one there on April 7th. Why is that relevant? That changed exactly where consumers were buying their food, where they were consuming their food. Here's a chart from the monthly Meat Demand Monitor project that was launched here just before the pandemic, supported by Beef and Pork Checkoff. The blue bars are what I'm going to highlight because they're the lunch meal. Has probably been impacted the most. And you will see in February and the first half of March, 30 to even 40% of lunches were consumed away from home. Red bar draws your attention to that. Starting the middle of March through the month of April, the percentage of meals for lunch that were consumed away from home was much lower. So 20 to maybe 25% was much more common. Why is that relevant? We don't consume the same type of protein, same products away from home as we do at home, and that led to a lot of product level differences. We actually had periods where wholesale beef prices for round, which is a primary source of ground beef production, were on par with loin, which of course is where we get some of our better steak products from. That is not normal, and that is not good from an aggregate beef demand perspective, because we lost the ability to get higher value out of the loin, primarily because of the food service decline. Second shock that happened was the bottleneck and the challenges on processing animals. Here's a figure and a link to the paper. That's a working paper I wrote with Jason Lusk at Purdue and Lee Schultz at Iowa State University. I've worked a lot with those two throughout the whole pandemic on related issues. And you can see here as April progressed, our ability to process cattle became quite constrained. So in the first quarter, we actually pulled cattle forward. We had year-over-year increases in the number of animals slaughtered. Early in March, you can see some spikes around that front, industry trying to get ahead of this, so to speak. And then as we progressed through April, we actually got to where almost 40% lower cattle processing, federally inspected cattle numbers compared to same point in time in 2019. That is the bottleneck I'm referring to, is we had a disruption in the ability to produce beef, and we started backing up cattle. So those fed cattle carryovers and backlogs at the feedlot became part of this story through starting mainly in April. And we still talk about it today, but that situation has improved quite a bit. The bottleneck, here's an image of that. It's kind of the pinch point is when we harvest animals. There's fewer of those entities in our industry for a long list of reasons we can talk about. Economies of scale is key to that. Probably the first time, at least in my lifetime, and for many in the US, we talked about quote unquote shortages. I tried not to use the term shortage because I thought it was misleading. There was no shortage of livestock. We certainly had plenty of animals in feedlots and hogs in market hog buildings and so forth, finishing facilities. But nonetheless, the term shortage was being used. Even Time Magazine, CBS Evening News took note. U.S. consumers took note and questioned our supply chain more than ever before. In hindsight, I will tell you, not only was shortage a little misleading, because I knew we had animals sitting and waiting, but consumers actually loaded up on their meat. You saw the commentary about ground beef being ran on, grocery stores, running out of ground beef and so forth, was partly because the public was loading up, filling the freezer and the fridge with ground beef. And folks actually entered the month of May, most people with more meat on hand than normal. So only 14% reported they had less meat on hand early in the month of May than normal. So I do empathize with those 14%, but they were the minority. And the commentary about shortages was a little bit misleading, thankfully, because the industry was able to turn the corner quicker and stronger in terms of production of meat in general and beef for our purposes here today than a lot of people were expecting. The third major shock, which is ongoing for sure, is the consumer demand aspects of this. Normally, economists would say we expect weaker beef demand when we have a recession. And we certainly are going through a recession. The second quarter was unprecedented in many ways. Beef, being a more expensive protein, tends to be more sensitive to consumer incomes, more generally consumer sentiment about the economy. So we anticipate weaker demand. That's been offset in no small part by unprecedented federal stimulus. So the CARES Act, the fact that something like 85% of U.S. residents got some component of federal stimulus, and spilled that over, some work would say, into more food and even more narrowly meat purchasing, has certainly offset some of those concerns. So that's been supportive of demand. How long that'll persist, what future stimulus efforts there are, and so forth is certainly an arena of current macroeconomic uncertainty, and we need to monitor that from a beef demand perspective. The other thing that's still fleshing out here is, and it relates to shock number one, is the growing importance of at-home meat supplies, meat consumption at home, rather. That has kind of a mixed bag. So I made the comment that that's presented challenges for valuing loin products, but it probably boosted the demand for ground products. As that meshes out and how long those patterns are in place, to the extent that people work at home longer than anticipated and go back to restaurants slower than some hope, we need to monitor that. I do think it presents a very mixed bag of impacts. It calls and highlights the importance of monitoring food service separate from retail, for example. And to drive this point home is the uncertainty of the macroeconomic aspects of COVID. We get updates on this all the time. One of the things that was came across my desk about 2 weeks ago was this chart from it's the Daily Shot, which is a spinoff from the Wall Street Journal. And it basically, to paraphrase, is what we were hoping were temporary layoffs are increasingly becoming permanent. That's why you interpret that bar chart there. That is going to put some pressure on aspects of food demand as we have permanent loss of jobs when we were hoping for it to be not permanent, of course. I highlight a book here for those of you that are just kind of fellow geeks like me, you want to understand this more. Tyler Cohen wrote several years back a book called Average is Over, talked about the change in the role of service jobs and specialization and so forth. I think that has a role here. I don't have space to talk at length about it during this session, but I encourage you to look that up. So go further, this demand update. Those are the shocks on COVID. Where are we sitting? Several of you probably know I monitored beef demand several different ways. One way is monthly updates using USDA data. This is lag looking backwards. We now can look back and say in the month of April and May, we had weaker beef demand per this measure than we had in 2019. To me, that suggests that the restaurant, food service, more broadly, HRI channel weakness was a bigger pullback than the strength we saw in a grocery store. So as consumers went to the grocery store and purchased food for at-home consumption, that was a boost, but it was offset in many ways, specific to the all fresh beef demand index I maintain, by weakness on the food service side of things. June, we had a spectacular recovery. You can see a big spike to the far right of this chart. And July was a bit mixed. It's worth monitoring this going forward. USDA does revise the prices they use up to 3 months later, and I'm going to be monitoring that June price for sure. On the export front, there's also some challenges that the beef industry's had. You can see a dip in this U.S. beef export demand index that occurred during the pandemic. We have had nice recovery recently, but that needs to continue. There are some reasons for optimism. The weaker U.S. dollar in the past few months should be helping our exports. Stronger Asian economies compared to the rest of the world, hope persist, because Asia is not the only, certainly, but certainly one of the main supporting sources of import demand for U.S. beef exports. And then, of course, you have to be able to produce something in order to have it available to export. And the fact that we have federally inspected beef production volumes back up to on par with prior year simply means those pounds are more available to export. One of the reasons our volume of exports was constrained was obviously the pounds weren't available, and the U.S. dollar prices earlier during the pandemic were making our products quite expensive for what was being produced. So what's the cattle price outlook? Let's summarize some of those points here. Here's a price chart. Some of you know I like to bring from LMIC. These are updated weekly. This is the 5 to 6 weight Southern Plains chart. The solid blue line is for the current year, 2020. The dotted line or dashed line is last year, 2019. You can see we started the year kind of on par, tracking 2019. And for the first couple months, that's exactly what we did. But then when the pandemic hit, you can see kind of the floor fell out of things. And through the end of March, pretty well through July, we were well below prior year prices. But we've had a nice recovery since then. And in many ways, projections for calf prices are within $5 per hundredweight for fall sales, which is relevant for most cow-calf producers, to what they were pre-pandemic. So if you compare projections around, say, February 1st with what's being projected here in the middle of September, you will find that projections for October are within, like I said, about $5 per hundredweight, which is quite remarkable, actually. The specific number I'll give you using beefbasis.com for the Salina market as of September 21st was an early October price of about $162, which again would be on par and slightly ahead, actually, of what we were last year per this chart. What about margins for the cow-calf sector? Here's a chart that LMIC maintains. Its return over cash cost. You can see the red bar there in 2019 was a loss of $51. Currently, LMIC is putting out a projection of a minus 17 for 2020. That's quite remarkable. I mean, if you would ask me, could we go through a pandemic and the average cost producer might have roughly a break even, which minus $17 is close to break even, would you take that? I think a lot of producers would take it. You never get excited about a loss of 17 bucks. I obviously understand that, but given the scope of disruptions this has had, not just on the beef industry, but society more broadly, in many ways, that's a win. It's also of note is the second round of stimulus, more broadly, the role of stimulus and those forms of compensation for producers are going to make that situation better. Looking out to 2021, plus $80 is the current projection LMIC has out there, consistent with the 5 to 6 week calf price I showed earlier, and a little bit of cost improvement that's built into those projections. So getting back to the stocker phase specifically, I encourage anybody that's marketing feeder cattle and looking to put weight on them to use beefbasis.com. So if you're marketing feeder cattle and just looking at the sales arm of this, for example, looking at selling off the mama cow here in October, I've already given you this number, expected cash price of $162, but you can use this beefbasis.com resource on your own to get a projected sales price on its own. The real value and the most unique part of this tool is to get at the value of gain of putting additional pounds on. So I'm going to give you a couple of different scenarios here. What about the winter backgrounding situation? These are all as of September 21st. But what about taking that 5.5 weight in Salina, Kansas on October 7th, and rather than selling it, you retain it or buy somebody else's if that's what your business model is, and plan to sell on January 13th at around 725 pounds. That's days on feed just under 100 days. Average daily gains about 1.8. I already told you the expected buy price is 162. Expected sale price from this tool is 147. Calculator behind the scenes here is using futures market and historic basis relationships to come up with these projections. The value gain that implies is $98 per hundredweight or $171 per head. I would encourage you then, of course, to compare that to your own cost, your own appetite for being exposed to the feeder cattle market, price risk, and so forth, of course, plays into that. But that is an attractive value gain that's going to get the interest of some in the industry. What about looking forward further into 2021? What about a summer grass situation where you might buy a 7-weight, 725 pounder specifically scenario I looked at early in April and sell around Labor Day at closer to 1,000 pounds? That's 154 days on feed is the scenario I use, sticking with right at about 1.8 for your average daily gain. Expected buy price is about 150, looking out to April. And the expected sale price, there's a typo, that needs to be 137, not 1137. That implies a value gain of 104, and that's about $284 per head. Again, I would encourage you to compare that with your cost, your interest in being exposed to the market during that point in time. The physical decision to buy, of course, is not until next April, but it's never too early to start monitoring that and thinking through how you're going to set up your operation. That brings up this tool. I've noted this in past stocker field days, but I think it's probably never been more important. So Kevin Duvetter built originally this KSU feeder cattle risk management tool, and I maintain it, put some tweaks in it over time. This is used for comparing alternative ways to protect against downward movement in feeder cattle prices. It's an Excel-based decision tool. Here's the link. I encourage you to make use of it. One of the things that it does is compare the do nothing or cash strategy with futures hedges, so CME board hedges, put option futures contracts, or the LRP option, which is livestock revenue protection, which is a USDA product. I'm noting the latter because there's been yet again some changes to that this summer. USDA announced there's some enhancements of that product. I'm not going to read all those details to you. Here's the link. I encourage you to go study it. One of the things of note is the subsidy has been increased. So the federal government via taxpayer resources is going to pay a higher share of that price coverage and the producer less than in the past. So if you've used this tool in the past and found it favorable, it's probably even more favorable today. If you've thought about it in the past and were kind of on the fence but chose not to, it might be more favorable today. Or if simply your risk appetite has changed because of COVID or other things, I encourage you to use that decision tool that I noted on the previous slide and use these changes on the LRP offering to help modify and update your decision-making process. Let's round this out. Let's look at the feedlot side of things. You might remember from past discussions, once a month I put out a projection of the Kansas feedlot profitability situation. I'm using information from the Animal Science and Industries department that leads the Focus on Feedlot survey, and I'm bringing in a bunch of Kansas market information, feeder cattle, fed cattle, corn prices in particular. I've put green bars around the closeouts for the month of September through March. So when I updated this on September 14th, you come up with projections for non-hedge situations that are positive for September through March. They look the best for the month of October, but they are $30 to $100 positive margins. And they reflect notable improvement in the fed cattle price situation and the fact that feeder cattle prices were declined earlier, particularly if the closeouts have fell into 2020 yet. So that's a notable improvement for the feedlot side of things that hopefully will offset some of the equity drain that certainly has happened during COVID for those that weren't hedged and or didn't get much stimulus assistance. LMIC puts out these quarterly forecasts. I gave you a few of the punchlines of this when we kicked off this session. First here I have commercial slaughter, dressed weight, and the commercial beef production. The commercial beef numbers are the ones to the right I shared earlier. I want to break down the 2020 numbers by quarter because there's an important point here. The first quarter, commercial beef production was up a full 8%. However, per capita U.S. consumption was only up 5.5%. In the second quarter, commercial beef production was down over 11% compared to 2019, but domestic consumption was down only 8%. Third quarter, fourth quarter, similar stories I could map out here. What am I trying to press on you? We have had larger changes in domestic production than we have domestic consumption per person for several reasons, but most importantly is the role of trade. Import and exports of U.S. beef products and products from abroad that become part of our domestic consumption have served a role of smoothing the flow and disruptions for U.S. consumers. That is one of the primary purposes of trade, among others. But here in COVID, the pandemic that's ongoing here in 2020, that has been revealed as very important. Some of you might remember in the month of May in particular, that commentary about shortages and the where's my beef slogans were pretty strong. We smoothed some of those disruptions via international trade. We also enabled pulling cattle forward in the first quarter and having exports in place so we didn't have that same volume increase domestically on the domestic market. That helped with the fed cattle backlog that's been talked about. So the role of trade has always been important. I'm quite concerned about protectionistic tones that have been elevated during the pandemic. I wrote a fact sheet to give some context on the historic role of beef exports and imports. The link to that is here. I encourage you to look at that. I hope you find that useful. LMIC's forecast for the price side of things. I gave the percentage changes earlier, but we break down 2020 looking through the third quarter. 5-6 weights in the mid 150s, fourth quarter upper 150s maybe. Fed cattle prices down 5-6% from the year before. Let's jump out to the third quarter of 2021, 5-6 weights, upper 160s to low 170s. Fed cattle price in that 114 to 120 range. The yearling price is coming in the 150s, maybe hitting 161, 162. Out to 2022, we have those prices, but better yet, being projected, mainly because LMIC's numbers suspect beef production's peaking here in 2020, and we're going to have some supply side support to prices going forward in 2021, 2022. In the event that the macroeconomic environment improves beyond what's built into these forecasts, I could build an argument for better yet prices. I think there are some reasons for optimism that global demand for protein will rebound, but that's going to hinge on global macroeconomic conditions and geopolitical relations. We'll have a lot to say about that. So monitor that, and potentially after our election in November, we may reduce some of that political uncertainty at least. That's not to say I'm predicting one way or the other who's going to win, but it'll just be one less source of uncertainty on the markets that I think might be favorable. I'm going to end there. You will find a PDF of these slides on my page. So on our Ag Manager website, I maintain a page that has this and a whole bunch of other resources. I've included some links throughout this talk to several of those. I give versions of these Outlook talks over time, of course, increasingly by distance during the pandemic. That's why we're doing Stalker Field Day virtually, of course. But I hope you find some of those resources helpful. And as I said earlier, I hope you have found the Stalker Field Day informative. I hope there's information from it that can help you not just survive, but thrive. Have a good day.
Thank you, Glynn. Say, I've got a question for you, actually a couple. But one of them is where does the CFAP payments fit into the overall picture? I mean, do we have any notion of how that might impact cow-calf returns, for example?
Yes, so I'm jumping in here. Wes, give me a thumbs up if you can hear me.
Yes, I can hear you.
Beautiful. Okay, wonderful. So I put a note in the chat to kind of drive that point home. Is my understanding, at least the second round of those federal aid payments are $55 for non-breeding animals. Now there are payment limits and other considerations I'm not going to spend an hour on here, but for the average cow-calf operator that might have a calf on the ground that was eligible, for a lot of them, that's going to be an additional $55 of revenue tied to that calf if they apply and get those funds. That's why I put the link in the chat. I encourage people to go get that. The LMIC number that I included, a loss here in 2020, did not reflect that. So in many ways, that additional $55 for a lot of the cow-calf sector will notably improve the average margins, to answer your question. So the projections I gave you earlier do not include any federal aid, stimulus funds. Anybody that gets those would be in a better position than what I presented earlier.
Okay, thank you. And I've got one other question is, at its worst, I'd seen different estimates of, say, 750,000 to 1 million head of fed cattle backlogged. And I know we've made progress. Any ideas on how much progress and how much work is left to do to clear that?
Yeah, the numbers now that I've been seeing, they're between 100 and 400,000. And yes, that's a wider range. And part of that is because there's more weight uncertainty that's showed up in that story. But regardless, I am confident we have continued to make progress. And that's a tribute to the entire industry. And that starts with the packer, it starts with the feedlots. And frankly, it starts also with the guys that still have feeders. As we talk about fed cattle backlog, for today's discussion, there's a feeder cattle backlog that was created by a fed cattle backlog. One of the reasons I'm not overreacting to the cattle and feed numbers the last 2 months is some of those placement numbers were inevitable because we had feeder cattle backed up from the fed cattle. But to directly answer your question, Wes, is 100 to 400,000 is kind of the range of numbers I'm seeing floating around on the current backlog. My personal gut is it's closer to that 1 to 200,000. I think we've made a real dent in it, and that's good.
Okay, very good. I appreciate that. Now, I tell you what, depending on what your leanings are, it's been absolutely amazing, all the disruptions and how the industry has reacted, each sector, and gotten us to this point where we're at as quickly as we have. So we appreciate it, Glynn.
Agreed.
Okay, now we're going to turn our attention towards the nutritional track. And we're going to look at alternative ration ingredients and how to make those work. And that's likely a more important topic than usual, given some of the pandemic-related availability disruptions. And no one better to lead us down that path than Kansas State Beef Systems Specialist, Justin Waggoner.
Well, I'd first like to thank all of you for joining us for this year's Stocker Day event. I'm really glad to be a part of this event, albeit in a much different format than what we are all accustomed to. Today, I'm going to be sharing some of my thoughts on making alternative ration ingredient changes work. Recently, the situation we found ourselves in this spring due to the pandemic, we saw some very dramatic changes in the availability of some of our commodities, principally wet distillers grains and some of the other byproducts. And so it really created some challenges for us in terms of what we might be able to utilize in many of our rations in place of those ingredients. And so I think there's certainly a renewed interest in alternative ration ingredients and how we might put some of those to work in our operations for us. Now, as I think about alternative ingredients, they really come in two types or two flavors. The first one of those would be what I would consider to be common feedstuffs, but they're not our first choice for some reason. They may be less desirable. We think of that in some cases, it's just simply cost. If we consider soybean meal or whole soybeans, those are certainly commodities that can be used in a cattle ration, but oftentimes they're more expensive. And so they're not the most economical choice for us to use in that ration. Another common feed stuff in this category would be grain screenings or grain dust. Certainly a very common, easily accessible feed stuff, but the variability and maybe some other issues associated with it may make it less attractive for a producer to use. The second, flavor of an alternative ingredient that we run across, and really for me, these are sometimes pretty exciting to take a look at, are what I would consider to be the more uncommon ingredients. These would be things like bakery waste or vegetable or produce waste, that may be coming out of maybe grocery store waste or simply stuff that they can't get off of the shelf fast enough. And so there's another alternative or another endpoint for some of those products that could be used. Now, as I look at inclusion of an alternative ingredient, really I have two goals. My first goal is that I'm going to try to match the current ration in terms of its nutrient composition as well as the palatability of that ration. We also need to be sensitive to costs and making sure that those changes that we're making are to our advantage from an economic standpoint. The second goal is we also need to successfully transition the cattle onto that ration. And, to me, it's really about dry matter intake. And from a very simple standpoint, dry matter intake on cattle equals nutrient intake, which directly equals cattle performance. So we have to get intake into those cattle to achieve acceptable levels of performance on those calves. So for me, one of the essential pieces of information that we really need on an operation to evaluate or to begin considering the inclusion of an alternative ingredient is we need to know what your current ration is. In terms of that formulation, what's the recipe? What's the recipe of ingredients that is going into the bunk? If we're going to try to match that, we need to know how many pounds of silage, we need to know how many pounds or percentage of wet distillers grains is going into that ration and be able to replicate that on a daily basis. The other piece of that is having some idea what the nutrient analysis of that bunk is. What's the chemical composition? And there's really two key pieces of information here. We'd like to have some idea of what the numbers look like of the ration that's delivered in the bunk. This effectively gives the nutritionist a target to work from. Where are your energy levels currently at? How much protein are you supplying in that ration? The other area where we do need a little bit of information is often on the commodities. What's the nutrient analysis of the commodities that we're using? This is really information that we're going to use to hit that target. So if you think of it as hitting a target and then intel that's going to, or intelligence and information that we're going to be able to use to hit that target in terms of those ration specifications. Now, in some cases, we may not necessarily need to test all of our commodities. Take, for example, corn. If we're simply using rolled corn, is it really worth us to do an analysis on that? Not necessarily, but if we consider forages, which are going to be the most variable, those are ones where we've really got to have some essential information to be able to build that ration. So we also have to move maybe a little bit deeper into that nutrient analysis and the composition of what's in the bunk. If we think about 20 pounds of feed in the bunk, what does that equate to? Well, from a chemical standpoint or the nutrient composition standpoint, it's 7.5 pounds of water. It may be around 2 pounds of crude protein and about 11 megacalories of energy. On the other side of that, if we look at our commodities, what's actually in a ton of wet distillers grain? So there's about 1,300 pounds of water, 217 pounds of crude protein, 42 pounds of fat, and 665 megacalories of energy in that ton of wet distillers grain. So it's that piece of information allows us to look a little bit deeper in terms of what's in that bunk. And when we put that information together with the information that we're going to gather on these alternative commodities, it really allows us to do a much better job of being able to hit those targets in terms of matching that current feeding program. So the other thing that ties into this is how do we evaluate alternative ingredients? Here's really two examples of what I considered, the common feedstuffs and then the true uncommon feedstuff that we can feed the cattle. With the vegetable produce waste shown here on the left, on the right, we have, this is essentially just a big pile of corn screenings. So you can see there what that would kind of look like. So once again, coming back to the nutrient analysis and getting an idea of what this stuff that we're looking at putting in this ration really is. Over here on the right, there's a nutrient analysis on some bakery meal. You can look at the specifications on it. And what we need to consider as we look at the nutrient analysis is, in your ration, what would this ingredient replace, okay? If we look at this bakery analysis, it's about 13% crude protein, 88% dry matter. If we look at the net energy for maintenance numbers, net energy for gain, et cetera, that's what's in, what is this really going to do? The other piece of that is, what do you need in your ration? Are you looking for an additional energy source? Are you maybe looking for a protein source? The nutrient analysis also allows us to begin to compare this particular feed stuff to other feeds that we're more familiar with. What's the cost or value of this product relative to corn? The other side of that is we can also do those cost per unit of energy and cost per unit of protein calculations that we're very accustomed to doing as we price other commodities into our rations. There's also some important questions that we need to consider as well. Many of these are not going to be listed on the nutrient analysis that we would get when we're looking at some sort of an alternative ingredient. For example, what's the physical form of the ingredient? Well, we see some indications here in this report, a bakery meal. So we start thinking, well, it's probably a very finely ground product. The other question as I start to ask suppliers is, how is this product handled? Is it something that we can auger? Other important questions, how is this product going to be stored? Can we effectively store it in a bin? Does it need to be stored in a commodity bay? Those are also important questions that we're not going to get a whole lot of information on in that typical nutrient analysis, but they are important questions as we begin considering how we're going to handle maybe this alternative ingredient on our operation. Now, the criteria that I use for evaluating alternative ingredients really isn't any different for the most part from the process or the criteria that I would use for evaluating any ingredient that we're going to put into a ration. The first place that I'm going to start is I'm going to look at the dry matter content. We always want to evaluate any potential commodity coming into a ration on a dry matter basis. That allows us to make an apples to apples comparison. We can remove the water. We can look at either a really wet ingredient or a dry ingredient. But if we put them on a dry basis, then we're making an accurate comparison between the components of those two rations. The moisture content also impacts the freight. How much water are we hauling if this is a wet ingredient? How much dry matter are we actually getting per ton? It also can have a significant impact on both the storage characteristics as well as the shelf life and how the product overall handles. So the dry matter is always the number one place to start. The second place that I look is what's the energy and protein content on a dry matter basis of this particular ingredient. Those are the two big things that we're after. We need energy and we need protein coming into those rations, and that's typically what we're going to be shopping for. The third thing that I give some consideration to is that many of these alternative feedstuffs have disproportionate nutrient concentrations. So I start to look for those things in the analysis. A lot of times we'll see higher fat concentrations. We may also see changes in the mineral concentrations, where we see elevated levels of phosphorus. If we consider the byproducts that we're very familiar with in terms of wet distillers grains, corn gluten feed, they're the byproduct of a process. Well, many of these alternative ingredients that we might be interested in incorporating into a ration are also going to be a byproduct of some sort of process or have been through some sort of process, which is either concentrated some nutrients and reduced the levels of others. And so we may have to make some considerations in our rations, adjustments in our programs. The other factor that sometimes can be an issue is the presence of anti-nutritional factors. Aflatoxins are a big one. I mentioned grain dust is one of those alternative ingredients that sometimes we get the opportunity to use, or screenings. In many cases, if we have any sort of toxins that are going to be present in the grain, those are going to be increased in the screenings or the dust that's coming out of that elevator that we might be getting that product from. My fourth criteria that I give some consideration to is, how will this ingredient react in the rumen? This is those factors like particle size. What's the solubility? Are we dealing with, is this a starch source? What's the the fiber aspect of that, as well as the protein? How is this really going to react in the rumen? The fifth gets a little deeper. Again, we need to look at and consider the fiber fraction, more specifically the NDF. What's the physically effective fiber? And the way that I try to encourage people to think about this, we need fiber to be physically effective in the rations. And so not all the NDF is created equal. Even with our common feedstuffs, if we consider the NDF fraction that's in hay versus silage versus wet distillers grains, those NDF fractions they're all NDF, but they're very different in terms of the type. Obviously, in a long-stemmed hay, we're going to get more physically effective fiber, have a higher percentage of physically effective fiber in that hay versus the same NDF that's going to be in the wet distillers grains. That's just really, it comes back down to the old term scratch factor maybe really applies. That's a pretty good way to describe what physically effective fiber would mean. So as we get into kind of some guidelines on ration formulation and alternative ingredients. So if we think about those common alternative feedstuffs that are alternative ingredients, most of the time the inclusion of those type of products is going to be limited by cost or the nutrient profile, and in some cases maybe some anti-nutritional concerns. Those, they are, they're a grain, they're a commodity, but there's something that makes them, they might be more expensive, which is going to limit them on the cost side, or something else. As we get into those less common alternative ingredients, those true alternative ingredients, my general recommendation on ration inclusion of those type of ingredients would be to target a level somewhere between 10 and 30% of the ration on a dry matter basis. This is really for two reasons. One, a lot of those type of ingredients, we know there's going to be some nutrient variability. And so if we include those ingredients at a fairly low level of the ration, that limits the impact of that variability on that total ration. The other aspect of that is oftentimes there's some supply concerns or supply and logistics issues. How frequent can we get a load of this particular product in? And with that being said, we also need to have a plan B. If for some reason we can't source that ingredient, can we reduce the inclusion of it pretty dramatically, or can we replace it with something else in the ration without greatly impacting the overall total of the ration? So that's one of the reasons, I try to keep those levels, or would recommend that we use fairly low levels in the overall ration of those type of ingredients. So I wanted to also look at a couple of different diet examples. So I put together a simple grower ration, hypothetical. If we look at a ration here that's basically 25% prairie hay, alfalfa, wet distillers grains, and rolled corn, 25% of each of those ingredients, we'd come up with a ration that's around 63% dry matter, really close to 15% protein, have about 0.72 megacals of energy, and be around 4.2% fat. So what would that ration look like if we utilize a fairly low inclusion, say 10% of corn screenings or grain screenings? So we do 25, 25, 25, 15, and 10. So that the screenings are essentially replacing some of the rolled corn that's in that ration. If we look at the nutrient analysis on that ration, dry matter essentially stays the same, crude protein really the same. There's essentially no difference between that. So this is one of those kind of classic scenarios where, because of the chemical composition or the nutrient content of those screenings, which are going to be 95, 98% similar to corn, we can include 10% of those in the ration with relatively low impact on the overall total nutrient composition of that ration. Could we foreseeably look at a situation where we might replace all of the corn in that ration if the supply of the screens was, of good enough quality that we could do that, and we were able to secure a sufficient supply that we felt comfortable doing that? Yeah, absolutely. We certainly probably could look at doing something like that, and that would present it as an option. So here's another example. This one is really takes some inspiration from how we addressed the scenario this spring, where we saw the decreased availability of wet distillers grains. So the same grower ration is shown on the left, and now we've replaced the wet distillers grains with some whole soybeans and some alfalfa. You see here the prairie hay is at 15%, alfalfa increases to 38% on a dry matter basis. We include 10% of whole beans, and then 37% rolled corn, which is a bit of an increase there to really keep the energy density the same. As we look at the dry matter composition of that ration, here's some changes, right? Okay, as we go from 63 to now, we've got a much drier ration due to the replacing the wet distillers grains. Our crude protein, our energy estimates are really right in line with where they were previously. So what has also changed is the fat content. If we think about those whole soybeans having somewhere in the neighborhood of more than 20% fat content, the addition of those is going to increase the fat content of that ration. Now, is it at a level where we would have some concerns? You know, anytime we go above 4% in a growing ration on a dry matter basis, you know, that's certainly something we need to take a look at. Is it excessive? Not at this level, but that fat number does limit the amount of those beans that we could potentially utilize in this ration. So there's just a couple of different examples of using some different ingredients where we've got similar protein, similar energy levels, and how those rations might change as we begin to put more of those ingredients that would be considered alternative back into those rations. So the second goal is we have to be able to successfully transition those cattle to a new ration. And if we're going to use some alternative ingredients, we're going to make some diet transitions in there. And so, you know, how do we set ourselves up for success to be able to do that? And I think the concept, you know, diet transitions and just how we make those and the concepts behind that, you know, it creates some anxiety for producers. And I think sometimes we forget that cattle are very robust creatures. You know, the rumen in itself is a large mixing vessel from a very simplistic standpoint. It's certainly not an all-in, all-out type system. We have feedstuffs that are rapidly degraded. We have others that are not. And part of the job of a nutritionist is understanding, you know, how feeds are going to be degraded in the rumen and how they're going to react in the rumen. And so, you know, yes, you know, it is unfortunate whether we do have some cattle during a diet transition that may go off feed, but as a general rule, a lot of times we can make those transitions and get along relatively well. So I wanted to offer, you know, kind of some insights and guidelines into managing diet transitions. As a general rule, cattle will generally consume approximately the same amount of dry matter or calories per day. And so one of the keys to being able to manage cattle through diet transition is if we know cattle intake. If I know how much feed a set of calves is consuming, I can calculate their dry matter as well as their energy intake and then make my ration adjustments on that basis. So if my new ration contains a similar energy content, all we're really adjusting is feed delivery. That's one of the reasons that I often recommend trying to match the ration that those cattle are currently consuming as we include that, especially in terms of the energy levels, as we, you know, look at including in alternative ingredients. All we're doing here is we're providing the same nutrients, but in a different amount of feed. And so we got the same energy density. We know the dry matter is probably going to shift a little bit on us. And so all we're doing is doing that dry matter to as-fed conversion and kind of addressing that with the cattle. So let's work through a bit of an example. So if we have some calves that are consuming 18 pounds of our grower ration, that's 70% dry matter and contains 0.7 megacals per pound. Pretty typical grower ration. So if we do the dry matter, that's 12.5 pounds of dry feed per day. So that feed is supplying 9.4 megacals per day of energy to those calves. So if the new ration is 80% dry matter, has a similar energy content, okay, that 12.5 pounds of dry matter, if we divide that by 0.8, that dry matter to as-fed conversion, it's going to take 15.6 pounds of feed to supply the same amount of dry matter because that ration is drier. If we kind of do the check, do the 12.5 times 0.75, we get that same energy density. So if our diet is similar with no major ingredient changes, okay, meaning we've just, that example where we dropped in the corn screens, didn't really change the composition of that ration at all, going to feed very similar. There might be some differences in terms of the grind size on the corn, but by and large, it's a very small change to that ration at a lower inclusion level. I'm going to offer 98% of the target. So of that 15.6 pounds, I'm going to offer those cattle 15.3 pounds to start off with. Now, often in diet transitions, we have to make some judgment calls. If those calves, if there's some issue due to weather or other factors, we can adjust that consumption down. That's just a good benchmark is to start, is to offer about 2% less than what those cattle we're currently consuming on a dry matter basis. So what if we have made some major ingredient changes? And I would define that as any time we've changed more than 40% of that ration. So in that particular scenario, I'm going to offer about 90 to 95% of that target on the first feeding, and then maybe step those cattle up 2 to 3% per day. My end game is I'd like to have those cattle back up to the same level of dry matter intake or the target consumption of dry matter intake in 4 days if possible. Really trying to limit the amount of time and making sure that we're getting adequate consumption of nutrients into those cattle so that we don't give up any performance in the long term of the feeding period. So there's also another way that we can, manage a diet transition. We just, in previous slides, we talked about kind of that abrupt transition where we go from the old diet to the new diet and how we might offer those diets. The other method that we can utilize to make a diet transition is blending rations in the bunk. This is where we're going to feed a portion of the dry matter intake for the day from the old ration and a portion of the dry matter intake from the new ration. Typically on a grower ration, I'll start at 60% of the old ration and 40% of the new ration on the first day. If we take that 12.5 pounds of dry matter intake from our example, 60% of that would be 7.5 pounds of dry feed from the old ration, 5 pounds from the new ration. On an as-fed basis, due to the moisture content of those feeds, that would be 10.7 pounds of the old ration and 6.25 pounds or 6.25 pounds of the new ration. Total as-fed feed intake for the day is going to be 16.95 pounds, okay? Second day, I would go to 50-50, which you can see the numbers there. The third day, I'd be at 40-60, so majority of the day's feeding is starting to come from the new ration by day 3, and by day 4, we could effectively switch those cattle over to the new ration completely. Now, on an operation where we feed once per day, typically I would start with the old ration, make a second batch of feed of the new ration, and put that out on top. If we're in a situation where we feed twice per day, a lot of times we'll feed the old ration in the morning and the new ration in the afternoon. There's really no set guidelines of how we do this. This is blending rations in the bunk is commonly done in the cattle feeding industry, where we have feed yards that may only have 2 rations in a 2-ration system. We'll have a starter ration and we'll have a finisher ration. A lot of times they'll make much smaller incremental changes than what we can do on these grower rations. But these are some numbers that have worked very well that I often give to producers. It's kind of a guideline in terms of how to make these diet transitions and blend rations in the bunk. So some additional thoughts on diet transitions. Cattle can be held at any point in the transition. If we're doing a 2-ration blend in the bunk and you're at that 50-50 step and it just seems like that we need to hold those cattle there for whatever reason, that's perfectly fine. We can hold them there for as long as we need to. There's some instances where we may offer those calves 12 pounds of dry matter intake and they may give us 2 pounds back the next morning in the bunk. If the easiest way to hit the reset button on a set of cattle is essentially just to back the intakes down or hold them about the same. Typically takes us about 2 to 3 days to reset those cattle, but there's really no harm in going slower and then increasing the feed delivery at the later point. A lot of times we'll be further ahead than if we try to get ahead of those cattle initially. So some general, as I kind of start to wrap things up, I wanted to give some general guidelines on, how do we make alternative ingredients work, and what are some key things that we need to have in place. And I think the first one of those is we really need to be an operation that knows what you're feeding. What are you putting in the bunk? What's the chemical composition of those commodities that are going in the bunk, so that we can do a really good job of putting an alternative ingredient in there, kind of matching your feeding program and making it fit. As we look at the alternative ingredients themselves, it's essential that we get a nutrient analysis. It's really impossible for us to evaluate those ingredients without it. The other piece that we've got to give some consideration to is there may be some handling issues or some other concerns that we may need to address with an alternative ingredient. In terms of making the transition on the cattle, documenting where cattle are, what are cattle intakes at, what are those cattle actually eating, that's really important, a really important piece of information in terms of strategically moving those cattle into the diet transitions. And cattle do handle diet transitions relatively well. I do think we just need to be strategic about how we do it and really have a plan in place. And if we do those things, there's endless possibilities in terms of utilizing some alternative ingredients within a feeding program. I mean, I think for myself and maybe a lot of people involved in the cattle feeding industry, my two favorite words are free and feed or low cost feed. And so many of these alternative ingredients certainly present some opportunities. We do have to look at them, take a closer look at what the chemical composition of those ingredients are, and then go about putting them in the ration in a way that's going to transition those cattle successfully, so that we don't give up any animal performance with those new ingredients or new commodities coming into the ration. So thanks for tuning in with us for this year's Stocker Day. It was certainly a pleasure to be a part of it. Thanks again.
Thank you, Justin, for your insights. But I do have a question for you. In today's, and so given the fact that some of these opportunities, alternative ingredient opportunities, they're regionalized, they can be localized, and it depends on what you're trying to accomplish in the ration, et cetera. With all of that said, in the current market, are there any alternative ingredient opportunities that you see emerge as economic candidates for consideration?
Sure, Wes. Hope you can hear me there. Give me the thumbs up.
I can. Yep.
I was going to try to kick the video here, but the host says I can't. So we'll respond to your question here. So you're absolutely right. There are a number of those ingredients. Here, we'll get the video started. That there are some regional differences. There's also some seasonal differences. Typically right now, as we come into this time of year with grain harvest, corn harvest coming on, that's usually when elevators begin we see more screenings become available. As they move that grain, they process that grain. And so that's one I always think of as we move into the fall months. Many times those screenings will be, the value in terms of the nutrient composition will be very close to corn. And if we look at the cost of those, they're going to be far below corn a lot of times in some cases. As we look at the protein commodities and the byproducts, we have seen, I'm going to say, some degree of correction in the availability of the distillers and the other byproducts, those disruptions that we saw earlier in the spring. So on the protein side of things, I think we have corrected, some of those as well. So good question.
Okay, very good. Well, thank you, Justin, for all your time and hard work.
Appreciate that.
And I'll also remind our viewers at this point in time, again, that if you have questions for our speakers, please use your Q&A box, and we'll try and get them answered. And now it's with great pleasure I call on a longtime friend and the man who's led development of the K-State Beef Stocker Unit from the beginning, a nutritional specialist in his own right, here to talk about the nutritional and management aspects of limit feeding, Dr. Dale Blasi.
Thank you and welcome to the KSU virtual Beef Stalker Field Day. Unfortunately, because of the past 6 months or so, we deemed the field day to be conducted this year in a virtual fashion. I've been tasked with addressing some research that we've been conducting at the Beef Stalker unit, looking at limit feeding. And so specifically this morning, I'm going to speak on nutrition and management, what we have found over the last 4 years. I think one basic tenet with respect to starting calves, whether they're preconditioned or even long-haul, highly stressed, auction market derived calves, is that we certainly don't want to already compound the many stresses that exist upon their arrival to your facility. And so trying to get calves on feed, full feed, as soon as possible to mount an immune response to the many challenges, to the vaccinations and all the treatment protocols that are imposed upon them is tantamount to their overall success. Some fairly old data conducted by Drs. Hutchison and Cole when they were in Amarillo almost 30 years ago, looking at the differences in dry matter intake between calves that were sick, morbid, versus their healthy counterparts. And it's rather dramatic in terms of trying to achieve a respectable level of energy dry matter for these calves to make that bounce, if you will, from one transition point to the next. And of course, we always look to long stem hay to help them bridge that first location to gain some semblance of a new environment, something that they can hang on to. But unfortunately, at its best, long stem grass hay doesn't bring the necessary protein, certainly not the energy, but we do rely on that nonetheless to get them at that first starting point. And so with respect to getting more energy into these calves, some really good research that's been conducted initially at New Mexico State and much later at Oklahoma State looked at the implications of delivering more energy to newly arrived calves. And what they have found that with increasing amounts of energy delivered to these long-haul stress cattle, there tends to be an increase in morbidity. And be it as it may, the potential reasons for this in terms of increased incidence or severity of subacute and acute ruminal acidosis may be due to the removal of roughage and the addition of starch, be that a fermentable carbohydrate that is not friendly at all to the rumen of these calves as they're being adjusted. But what we have also seen from this same research is that as energy is increased, we tend to see increases in animal performance. Be that as it may, high energy-based diets in receiving protocols are still cautioned by nutritionists today. Now, limit feeding in and of itself has been around an awful long time. By definition, limit feeding is a feeding method by which the net energy equations are used to calculate the quantities of feed required to meet the needs for maintenance and at a specific rate of gain. The net energy equations have been around over 50 years, developed initially by Professors Lofgren and Garrett. It is one of the tenets of ruminant nutrition today, and we rely on these equations quite heavily. Back in 1986, Oklahoma State University sponsored a very informative symposium addressing feed intake, and at this, one of the speakers at the symposium was Dr. Bob Lake, who was at Hitch Feeders at that time. Limit feeding really simplifies bunk management, feeding once per day. And for many folks that, especially this time of year during harvest, with so many other things going on in the operation, simplified feeding once a day is really a powerful selling point with respect to newly arrived calves. Limit feeding does require some knowledge of feed milling needs in terms of having a mixer wagon with dependable scales on it, an appreciation for the mix time it takes to thoroughly and not properly overmix a ration. The marketing benefits will speak for themselves, as I'll point out later in this conversation with you today. In this day and age with sustainability, we hear that word an awful lot today. I think there's some incredible environmental benefits that we need to look at again as an industry. And then finally, with antibiotic usage, I think limit feeding in and of itself from a health management perspective lends itself to identifying calves by the means of limit feeding. Now, this slide merely shows one of our earlier trials that basically we had a very good estimate, a good weight of the cattle as they went on feed. And because we are a research facility, we do take weekly pen scale weights, but a producer can take and really have a good idea initially and simply calculate out the needs of that animal and basically stage them throughout the period of time you wish to keep them until you decide it's time for them to leave your facility. This slide here depicts some great work from Iowa State University. Dr. Garland Dahlke developed a really good ration calculator, and he inserted this feature into the feedlot segment of this program to help a producer basically calculate in the incoming weight of these calves, desired performance, and based upon that, basically a calendar, a weekly, or in this case, a daily delivery of the amount of feed for the number of head, in this case, 100 head, to deliver these calves for this basically 1 month time frame. And so it's very simplified. It basically accounts for the increasing weight of the calf, and you merely provide added amounts of feed for the calf as it grows. There are several advantages of limit feeding and some great research that's been conducted in the past. The Ohio State University has done some good work, Oklahoma State. Many of the major beef institutions have conducted a lot of work over the last 30, 40 years looking at limit feeding. And through all that work, what they've determined is that it reduces the cost of gain. It provides a producer to know with respect to the flexibility and commodity trading. As I alluded to earlier, less roughage and manure handling as a consequence, decreased feed wastage, decreased bird predation. We have a lot of starving problems in Kansas, rodent issues, less labor, equipment, and feeding expense, and then finally marketing. Now, what is it about limit feeding in terms of improving efficiency in the animal? One thing we know that as we restrict the animal in terms of the allowance of feed that it receives is that the passage rate of that digestive moves much, much slower through the digestive tract of the animal. And as a consequence of decreased intake, there's a decreased passage rate, and so there's a greater opportunity for greater absorption of those nutrients, which translates into an improved digestibility when all things are said and done. So our higher energy diets are usually already more digestible based on ingredients, be it byproducts and certainly the cereal grains. Roughages in and of themselves are diluents in a diet and are only marginally digestible at best. Typical rule of thumb is 2 pounds of a forage is equal to 1 pound of a cereal grain in terms of the amount of energy that can be derived from it. Limit feeding then and now, back during Dr. Lake's time, they were talking about cattle being started slowly about 14 days post-arrival. And bear in mind that the limit feeding diets being used at that time consisted essentially of about 2/3 rolled corn with only about 13% of a roughage source, be it alfalfa pellets or cottonseed hulls. What we have found at the stocker unit over the last 4 years is that upon arrival, calves are allowed 1% of their body weight of a long stem grass hay, and that is only on their day of arrival. The very next day, we start our limit feeding diet at 1% of their body weight. And afterwards, at each day from there on out, we increase that amount 0.25% to finally 2.2% of the animal's body weight. And it typically is as early as day 5, but it could slip to day 8, if not day 9. Now, the key to making this work to get these cattle on feed at such a quick pace is the high co-product inclusion that we insist upon. And at this point, we're talking that 40% of the dry matter basis in the diet. Now, with respect to limit feeding and bunk management, having adequate bunk space is absolutely necessary. At the onset, empty bunks and hungry, aggressive calves waiting to be fed will be nerve-wracking. That is a guarantee. And we will also tell you that after our experience over the last 3 or 4 years, bunks will be licked slick within 4 to 5 hours post-feeding. And for the remaining 20 hours or so, will be completely clean. The calves will lay around and they just basically get used to only being fed once per 24-hour time period. So the diets of 20 or so years ago, consisting of 2/3 corn, again, 5% cottonseed hulls, 8% alfalfa pellets, consisting of an energy concentration of 0.58 megacals per pound and a crude protein level of 16%. What we are using quite successfully today is a diet, as I alluded to, containing wet corn gluten feed at 40% of the diet, or even wet distillers. And I'll show a very simple trial that we conducted as well to substantiate this. Corn, about 39% of the diet, and only 13% of the diet consisting of ground alfalfa and prairie hay. And I will tell you that we are now moving to 13% prairie hay and omitting the ground alfalfa completely, so that when it's all said and done, when including the supplement, we're only talking about 4 feed ingredients that are going in to make a diet that's at a 60 NEG and a crude protein level of 17%. Our first study that we conducted to look at this concept consisted of 354 crossbred heifers weighing 490 pounds. These cattle were acquired from auction markets in northern Alabama and Tennessee, and they were assembled by our order buyer at Dixon, Tennessee. We utilized 4 treatments in this first study. First treatment was basically an ad lib, typical receiving diet, formulated for 45 NEG megacals per pound, and it was fed ad lib. This was an ad lib fed treatment. There were 3 remaining treatments were fed at 95% of the ad lib, 90% of the ad lib, and finally 85% of the ad lib, with increasing concentrations of energy equal to 0.5, 0.55, and finally 0.6 megacals per pound of TDN. Every morning, the grad student and everybody would remove and weigh all of the hay and feed refusals from the ad lib and basically adjust the intakes of the other 3 remaining treatments accordingly. So we were remaining as true as possible to the 95, 90, and 85% of the ad lib treatment that we imposed. When it was all said and done, this is what the diet looked like. The ad lib cattle were fed at 45%, consisting of alfalfa and prairie hay. Almost half of that receiving diet consisting of roughage. Only 9% dry rolled corn and 40% sweet bran. The 3 remaining limit-fed treatments also contained 40% sweet bran, but decreasing amounts of roughage from 1717 in the case of the 50 NEG per pound of dry matter to only 13% taken together the alfalfa and prairie hay, and 39% dry rolled corn. Now, something that we experience in our livestock world throughout many parts of our country is the occurrence of drought and dry conditions. And having to rely on a stable supply of roughage, I think everybody appreciates those challenges. In periods of short supply, prices are driven up, competing industries such as our dairy industry and so forth. And it really becomes a major hassle, especially when you think about the grinding of the roughage, the loss of the leaf from the alfalfa, everything that goes along with that is a major hindrance. And at best, roughage is pretty much a dilutant, as I indicated earlier. It helps with rumen health and so forth, but at the end of the day, it just translates into more manure that's being produced, and I'll show that information here in a short bit. Speaking specifically for Kansas, drought for us is a fact of life. It occurs in many locations and areas in our state at various times. Sometimes it's very extensive and sometimes it's very concentrated in terms of where a drought can rear its ugly head. But it is a fact of life, and we need to build and think about feeding strategies that we can minimize the impact from the variability and the weather and the precipitation that we see. Now, with this particular trial, we decreased intake by design. So calves that were ad-lib fed, or to appetite, if you will, achieved about 14.5 pounds of dry matter, as opposed to the 60 NEG cattle that were fed about 12.5 pounds. So that translates into only 2 pounds of dry matter intake between the ad-lib and the 60 NEG fed cattle. But bear in mind the concentration of the energy and the protein that was in the diet. Every mouthful being consumed by the 60 NEG, they were obtaining more energy from less. On an ad-lib basis, those cattle that were ad-lib fed consumed about 2.62% of the ad-lib diet. And again, like I told you earlier, feeding the 60 NEG diet and restricting to 85% of that, we achieved an intake of about 2.25. After this particular trial, we saw only a numerical increase in performance, especially with the 60 versus the 3 other treatments. But taken together, the dry matter intake and the average daily gain generated from this research, we saw a significant response in terms of improved feed efficiency for those cattle fed the 60 NEG diet versus the 50 and even the 0.45 ad-lib fed diet. Other corn byproducts, such as distillers grains, is more prevalent, if you will, throughout the beef belt in many of our states and locations. We conducted a study using calves, steers, derived from superior livestock. These cattle, we got 2 loads from Groesbeck, Texas, and 2 loads of these steers from Hatch, New Mexico. We conducted a 2x2 factorial design study, which basically means we compared calves fed wet distillers versus the sweet bran, and we also leveled in whole shelled corn and also the standard dry rolled corn. All 4 diets were formulated to provide 0.6 megacal of energy per pound of dry matter. We had 8 represented pens per treatment, and we collected pen weights weekly, and we adjusted the increasing weights of the calves and thus the dry matter intakes accordingly from week to week. What we found was that there was no impact on corn processing or byproduct fed as well. Said another way, there was no difference in the response from the sweet bran or the wet corn gluten feed or the wet distillers, or feeding calves whole shelled corn or dry rolled corn. Looking at efficiency, we saw comparable differences as well. No significant differences for byproduct or corn processing as well. So we concluded that there was similar performances derived from either co-product. We saw no impact on health. We did observe lower overall efficiencies, but we did feed, in the case of this study, at 2% of body weight. And I mentioned earlier, I believe our sweet spot, what we've determined over the last 8 or 9 trials, is about 2.2% body weight, is where the sweet spot for performance is. We also concluded that the extent of corn processing does not impact performance. So producers out there that are taking corn in to be rolled for the use in their calves. Guess what? This trial and previous trials that we've conducted have found that there's really no added benefit for calves, newly weaned calves, all the way up to 800, 850 pounds need to have corn processed in any form and can be fed as whole. So 10 trials and ongoing, what we have determined is that there's no adverse effects on health, and we have observed a 27 to 30% improvement in feed efficiency by limit feeding. We get more out of it. It's more digestible, the feed stuff, that the diet that we're feeding, and we would expect there to be better performance, and that certainly is the case that we have observed. The other side of the coin, once the animal waste goes through the animal, we have issues, and many livestock operations have nutrient management plan issues. It's a huge issue it's a millstone around a lot of operations' necks, especially if a producer no-tills and has to concern themselves with weed load and certainly soil compaction. So trying to produce beef efficiently and at the same time to minimize animal manure issues and in terms of content, the amount is a huge issue. What we have found with limit feeding, we have conducted associated intake and digestibility trials with each of our pen studies that we conduct. And what that basically means is our graduate students do very intensive studies using cannulated beef cattle, basically having a window into the rumen of the animal to collect samples and to basically get a better understanding of what's happening to the digesta as it moves outside through the rumen and ultimately into the manure. In this particular study, I want to draw your attention to the dry matter intake of these steers was 20.2 pounds, and again, the restricted cattle were only getting 14.8 pounds. But bear in mind the 45% roughage, the 22.5 and the 22.5 of the alfalfa and the prairie hay, translated into almost 8 pounds of neutral detergent fiber versus 3.81, basically cut in half. Acid detergent fiber intake, 4.11 pounds versus 1.458 pounds. The digestibility, we observed 0.62 versus 0.71. So there's greater utilization of the diet moving through the animal's tract. When it's all said and done, there is a 42% reduction in the amount of fecal dry matter output. We're talking 7.5 pounds of manure dry matter versus 4.34 pounds dry matter, a 42% reduction. That is substantial. Here's some drone pictures that I took from a trial we just finished up this last spring. We had 16 pens total. Can you see the difference between the darker pens that were fed ad lib versus the lighter colored pens that were the high energy 60 NEG limit fed diets? Very apparent. This is one set of treatments here, 2 and 2. Here's a dark one, a light, 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 dark, dark, and you can see it. You get the point. It's substantial, especially during wet, inclement events, cold, wet weather. We got a lot of energy issues in terms of animals moving themselves through in terms of maintenance needs. Manure issue is a huge one. And as an industry, I believe limit feeding is one strategy we can use to make ourselves a more efficient industry. Feeding logistics. We've done a fair bit of work using GoPro cameras mounted to the tractor and to our feed wagon to quantify the animals visiting the bunks in terms of enthusiasm, to try to do it from a health check measure, but also to calculate the amount of time it takes to mix feed containing a lot of roughage versus diets that do not have a lot of roughage, that being the limit fed. And so with increasing amounts of energy in the diet, the number of loads to deliver possibly can be reduced. You might be able to even shave one load off per daily feeding and thereby save yourself added labor, tractor hours, and etc. There's also a reduction in feeding waste. more of it's going into the animal. And we've seen the animals with high roughage fed diets putting their head in the bunks and raking their heads outside of the bunks and throwing the feed outside, creating a great opportunity for rodents and also for the starling bird predation. I think there's great opportunities with limit feeding to have those bunks cleaned within 5 or 6 hours of being fed in terms of having pests, if you will, that are around your feeding facilities. What happens at the feed yard? I've received a lot of questions from producers asking, well, what are the implications of limit feeding during the backgrounding phase? And when these cattle are eventually moved into the feed yard, are we tightening their guts up so much that they aren't able to express maximum dry matter intake? There's a lot of questions regarding the period of time it may take to get these calves on feed. If they're already on a 60 NEG diet, can we perhaps shave a week off of getting those cattle stepped up quicker and getting them through the system much, much faster? Before I proceed, this is some of our intensive work with the intake digestibility study, the cannulated cattle. And what we did find, in fact, that with the 60 NEG diet, the pH, of the 60 NEG diets, there was a linear trend downward. In other words, it got much, much more acidic. And in terms of the time below 5.5, you could see the 60 NEG diet, 764 versus 542 minutes. So, you know, are we potentially impacting the rumen papillae? Are we creating potential liver abscesses down the road where we may not be expressing full performance and holding these calves back? Those are legitimate questions that we had, and we answered that question earlier this year with some calves that we followed through the feedlot into the packing plant. This next slide shows this dark yellow line represents the 60 NEG fed cattle over a 24-hour period. Once they were fed, the pH does get down there. It does get down to perhaps right around 5.4, as opposed to the hatched blue line, the ad lib fed cattle, barely got just a tick above 5.8. So there are differences. We are experiencing different reactions, if you will, in the rumen with respect to the energy content of the diet being fed. But I still maintain that feeding the digestible fiber from the co-product is the key, as opposed to using the high starch that we find in many of our cereal grains. What we found from the raw closeout data, this is raw closeout data, and we did separate the heavies and the lows, and so we had 4 pens of cattle that we followed through. With respect to the light-fed groups of cattle, they were fed for a period of 161 days. The limit-fed cattle come in heavier than their respective ad-lib-fed cattle, and the same as well with respect to the NEG, 60 NEG versus the 45 NEG fed group that were fed for only 41 days. In terms of closeout for the light-fed cattle, these cattle came off heavier, the 60 NEG cattle. We did see some compensation in terms of increased average daily gain, as well as feed conversion as well. And I think we should expect that coming off of the limit-fed cattle from that backgrounding phase. The same trend held true as well in terms of the increase in average daily gain, as well as the improvement in feed efficiency during that finishing phase. In both instances, and for both the light and the heavy group, dry matter intake across the respective feeding period, there was really no difference whatsoever. In the meat, we saw cattle that were only numerically, those limit-fed cattle numerically heavy by about 7 or so pounds compared to the ad-lib-fed cattle. Hot carcass weight was only numerically different. However, we did see more fat deposition, more back fat at 0.71 inches versus 0.65. For quality grade, No significant differences between either the 45 or 60 background fed cattle. And with respect to the liver scores, looking at the health of the liver, there was no significant differences between the 45 ad lib versus the 60 limit fed calves. I mentioned earlier the marketing window in terms of how people can leverage this. If you know the rate of gain, if you do know the rate of gain that your calves are growing at, you can project in 3 or 4 or so months into the future, and utilizing a really great tool that was developed by my colleagues over in the Department of Ag Economics. It's called beefbasis.com. It allows you to lock in the weight of the calves, your intended sell date, your buy date, and you can look into the future and look at the actual daily gain and also the projected value of gain of these calves. So you can, if you see an opportunity, you can idle the calves up a bit, or certainly you can idle them back if you want to hit a particular window. I think there's some great opportunities if you're looking to market your cattle as feeders into the future. Something to look at. Now, for us at the Stalker unit, I've done the calculations. If we look at the efficiency, and these numbers are all expressed on a per 100 head basis for a 90-day turn. With our ration feed efficiency, we're looking at about $1,460. Our manure production costs us to move this manure off of the location we're at. And by the way, I invite you folks in the future to actually come to our Stalker Field Day. It'll be in September next year, 2021. But it costs us true money to move the manure off of our facility, about $500 for 100 head. We see our savings there. I don't have a number on cattle health detection, but intuitively, if those calves have only been fed once a day, and if they're not at the bunk when the feed wagon rolls up there, there's probably a problem somewhere. And so we tried to quantify it, but we were unable to, but there's something to it there. The market window, there's some value there. And Dr. Tonsor will talk more about the efficiency and so forth in the presentation following this one. The finishing phase, the reduced days to full feed. I alluded to that earlier. That's going to take a lot of coordination, if you will, between the nutritionist for the feed yard, knowing the feeding conditions for those calves that were backgrounded and how they're going to be eventually integrated into the management at the feedlot. It's going to take some integration, but I think it's a good point to consider that calves that have been limit fed, especially at the 60 NEG level, are acclimated to a higher energy content. We saw the pH levels in those rumens. I think we could shave some time off getting those cattle up to a full feed ration. When it's all said and done, we figure about a $20 bill savings from limit feeding, not including these other 4 factors that I placed here. With labor savings, feeding once per day, it could go as high as $2,700 if you're feeding on a twice-a-day basis. And so, as I wrap up this presentation, there's a lot of aspects to limit feeding. I think, first of all, co-products, very critical in this case. We're feeding at 40% of the ration dry matter. So if you're going to deviate from that, please be mindful of this very important consideration. The low roughage inclusion, I think, is a winner in and of itself for growing cattle. The market planning is vastly improved. Knowing how your cattle are growing and being able to predict how they will grow using the NRC equations is very apparent. Reduction in manure output, I think, is from a sustainability perspective, I think it's true. We've shown the continued improved feed efficiency values, and the health detection, I think, is a huge one as well, especially in this day and age with our antimicrobial usage. I would be remiss if I didn't acknowledge the many members of our team that are responsible for generating these results. Certainly the manager and RAs, Bill Hollenbeck, Ross Wall was with us. He left not too long ago. Kyler Sewer, our research associates, A good friend of mine, a close confidant, and an adjunct professor, Dr. Sean Montgomery, is very instrumental with his experiences, actually working with producers out there utilizing this technology, as well as the KSU my KSU colleagues, Doctors Evan Tigemeyer, Tarpoff, AJ Tarpoff, Greg Hanslicek over in the diagnostic lab, and Dr. Nagaraja in the vet school. And the graduate students who put a lot of hard work into generating these results for their theses, Tyler Spohr, Marissa Johnson, Charlie Sasser, and lastly, Morgan Salachi. I appreciate each and everybody's contribution to this work. And with that, I appreciate everybody's attention, wish you well, and look forward to seeing you next year in the flesh at the KSU Beef Stocker Unit. Thank you.
Hello, this is Dale Blasi, and I'd like to introduce Dr. Glynn Tonsor for the final presentation regarding economic aspects of limit feeding. Glynn?
Hello, this is Glynn Tonsor. I'm a faculty member of the Department of Agriculture Economics at Kansas State University. I'm making this recording titled Economic Aspects of Limit Feeding for the Stocker Field Day event, which normally occurs in person in the fall here in Manhattan, Kansas, and is being done virtually this year. The presentation is actually done jointly with Claudia Song, which is a master's student pursuing her graduate degree here at K-State. And she's been working with myself and Dale Blasi and some others on this topic. And we're going to share some of our results here today. Before I go any further, I want to give credit where it's due. Aspects of this project have been supported by a National Cattlemen's Beef Association research grant with K-State. Dr. Blasi led that effort. Myself and others are collaborators on it. You can see the grant number here, and I will acknowledge that funding support. As quick, broader background to kind of set the stage for this discussion, I think most of us are aware there's ongoing questions and calls for documenting production practices, and at times calls for change. Some of that, and more recently, a higher share of those calls have fallen under the bucket of sustainability. We've probably seen the term sustainable production, sustainability in more ways in the media in the last 3 years than in the past. And that is of note. The beef cattle industry is not the only food segment that's dealing with that, but it's important to recognize there's a lot of questions that come up sustainability to me and as it relates to the beef cattle industry. I'm not a life cycle expert. I'm not a definitions expert. And I get concerned about, I shouldn't say I'm concerned, is I always pause and say, what do you mean by sustainability? Because it's not a standardized term. So it's not standardized like USD organic, for example. So sustainability means a lot of different things to different people. In my eyes, sustainability usually involves resource use, impact on the environment, and economic viability. Those are certainly components, probably not a complete list, but those certainly are components of the sustainability discussion. And it won't surprise you as an economist, I think economists have a role in that discussion, speaking to economic viability. For the specific production practice decision today that we're going to talk about, which is limit feeding of beef cattle, we're going to hone in on the decision about whether to limit feed, which is just constrain the amount and the type of feed that are available to, in our case, stockers, and more generally the stocker backgrounder segment of the beef cattle industry, and compare that with an ad lib, so eat all you want kind of approach. There's a lot of considerations that go into that decision about what feeding practice to use. You've already heard some about that. How is animal performance impacted? How do you need to change the ration? Does it change the labor involved? There's a lot of physical components, both for the operator, the land, and the cattle, that certainly have a role here. And at the end of the day, my job, Claudia, and others that are trying to contribute insights on the economic front need to add into the economic assessment piece of this. So this isn't all inclusive, but economics are a key piece of that decision, and we're going to try to enhance decisions by providing some of those related economic insights. So Claudia's master's thesis here at K-State is ongoing. You're going to see some of the outputs we have in hand, and I'm going to allude to some of the things that are still in process. One of the biggest things we're going to talk about today is some Excel-based decision tools that she's built to hopefully help cattle producers make better decisions as it relates to the merits of limit feeding on their operation. She's done this separately for the stocker segment and the feedlot segment, and you'll see why here in a few moments. Multiple resources came from this. In the spirit of a lot of other decision aids that you'd find on our agmanager.info website, these were designed where several inputs can be adjusted, and Claudia's going to walk through that for you here in a moment, and they hone in on a bottom line decision. In this case, limit feed versus ad lib, what's the projected net margin difference between those two practices? That's what drives this entire effort. Also, and outside of the NCBA funded work, I actually had the opportunity with Claudia and another master's student, Megan Brentz, had a related project that again involves the stocker segment, different feeding systems, intensive feeding systems that is. We looked at some feedback we got from a national survey. So we had the opportunity to do a survey in April and May with the help of others. And I'm going to give you some initial insights of some of that ongoing work as well. So here's a picture of Claudia. I wish we were sitting in front of you in person. I enjoy every year, September, early October, going out to the stocker field unit and having this in person. You would have the pleasure of seeing Claudia and I in person as a normal year, but you're going to have to settle for a virtual audio recorded version, and you're going to hear from her in a moment. I've put a screen picture here of a recent addition to our agmanager.info website, and you can see there's multiple entries. Middle of September, these were made. And these are different links to these Excel-based decision tools I just alluded to. With them are actually word-based fact sheets to kind of talk you through it, so to speak, in writing. And then what I really want to call your attention to is the bottom here. You can see there's a movie clip, and it's an MP4 file, roughly 20 minutes long, that Claudia has built. That's basically a tutorial of how to use the stocker segment decision tool. In a few minutes, I'm going to play a few clips of that, partly to bait you to watch the whole thing, but also to hone in on some of the key points of these decision tools. Before I do that, I want to strongly encourage any of you that operate in the stocker segment to make use of these tools. We're going to share base information. I encourage you to tailor it to yours. That's the whole point of these resources. I hope you find her tutorial helpful in doing that.
A research study was conducted at the Kansas State University Stocker Unit to evaluate the impacts of limit feeding during the backgrounding phase and to develop an economic framework to measure and quantify the sustainable attributes of limit feeding. Throughout the research trial, 418 calves were allotted to 2 treatments. One was a higher energy diet that was limit fed, and the other treatment was a lower energy diet that was fed ad libitum, so as much as the calf would eat. Those limit fed calves were restricted to about 85% of the intake of the ad libitum fed calves. And then throughout the trial, performance data, tractor and mixer usage and delivery time, and health data was collected throughout the trial. And then all of those variables were utilized to build producer budget sheets that compare the cost of each feeding type in the diets fed. These budget sheets are built off of the research conducted at the stocker unit, but also allows and encourages producers to input their own operation costs as well, so it's representative for their operation. The budget sheet is designed to serve as a barometer to compare the profitability for the backgrounding or stocker sector, to compare the cost and benefits of growing stocker calves through limit feeding or ad lib feeding those cattle. The budget sheets are not intended to represent any one operation, and each individual should input key inputs to reflect their own operation. Those values that are designed to be adjusted for specific operations are denoted in blue. So there are default values in place. Those defaults came through either the research at the stocker unit or through KFMA values or other research. So there are default values in there, but if it's a blue value, we highly encourage you to go through your records and input those costs specific to your operation. And then the black values are automatically calculated through formulas or other research, and they should not be adjusted. And then there's a feed tab, which I'll show you here in a second, which is the diets utilized throughout the research. If you choose to use a diet other than the diets provided, you can update that information accordingly, and it will update within the respective sheet. So here within the introduction, it just gives you some definitions of what each value represents. So as you're going through your records, thinking through where does this cost get accounted for at, different things like that, and also explains how we got the values that we did. So there's the production efficiency information up at the top, then it goes into gross returns, variable cost, accounting for different costs, and then the fixed cost at the bottom. So to begin, we'll just head over to the feed tab. So here at the top, we have the ad libitum fed diet. So this is the diet, the lower energy diet that was fed for as much as the cattle would eat. So it shows you the ingredient breakdown for the pounds per head per day, the cost per pound for that ingredient, and then finally at the bottom, the total cost per head per day. Again, if you are feeding a different diet, you should update this accordingly and making sure those costs are on a per head basis. And then at the bottom, we have the limit fed diet, so the diet that was restricted and fed at and was a higher energy diet. So you can see the ingredient breakdown from the research trial and the cost per pound, and then ultimately the cost per head per day. So once we have that updated, I'm going to go through a producer example. For example, if someone was sitting across from me and we were thinking about this for their operation. To begin, we'll go through the ad libitum sheet first, so putting in the information that we found throughout the research trial and also inputting those variables that represent each operation into that, and then we'll repeat the process for limit-fed cattle. So to begin, we go up here to the top section, which is our production efficiency information. So I'll just go through an example and show you what values you input and how kind of the spreadsheet works, and ultimately how we interpret the results. So to begin, we'll start with death loss. So for this example, the producer has a death loss of about 1.5%. So we change that. They typically background their cattle for 150 days. And they typically manage for an average daily gain of 2.5 pounds. You can see as we change these values, a lot of the black values are updating as they are formulas that we've set up so they read off of those values that producers change. So we see our hundredweight produce is updated, and then we go into our gross return section. Our feeder animal sale price is based upon the default price is a March steer price, and then the purchase price, this down here, is the default is based upon an October steer price. So you'll want to be sure you are updating those prices based on the time of year you're purchasing cattle, or if you're purchasing heifers, just be aware of that those prices can change and you should be updating those for seasonality and the type of cattle you're purchasing. So we'll leave that for this example, and then you'll also want to update the weight that you typically purchase those cattle at. So for this example, they typically purchase them at 550 pounds. Update that, and then you'll see that this value changed once we updated that. So that was a formula that doesn't need to be touched, but it is going to update based off of those inputs. So that brings us to our total gross return of $377.55 per head. So then we'll move into variable cost. So the first three lines are all about pasture, crops, harvested forage. So if you're utilizing those resources to background cattle, you'll want to input values there. For this example, the producer doesn't utilize those, they bunk feed and their cattle are on a lot, so we'll just leave those zeroed out. And then we have the grain, protein, and mineral supplement cost. This feed cost here is, it comes off of the feed tab. So it's directly right into there, so you don't have to update that. It pulls it itself, and then it's multiplied by the days in the backgrounding lot and gives us a feed cost of $154.59 per head for that calf while they're in the backgrounding phase. Then if a producer has any other feed costs, they can include those here. And then the labor wage. So for this example, they have a labor wage of $17, and it's multiplied by a value that was found through previous research that is the labor requirement for stocker cattle. So that gives us a labor cost of $25.50. And then next we have the average precipitation events. So you want to think about the climate that you are raising these cattle in. If you're getting a lot of rain, it's going to require more labor as you're having to clean out those bunks and different things like that. So this producer is estimating about 3 rain events. So we'll input that and it updates our cost. And then next we have the mix and delivery time of the diets. So as I mentioned in the research, they recorded the times that it took to mix the diets and also to deliver those diets. As we're feeding 2 different diets and feeding them at 2 different volumes, we expect our labor requirement to change. So we update our labor wage here, and then this 0.813 was found through the research, and that's our time that it took to limit feed those cattle. So the limit feeding took a little bit less time to feed. So down here, we have the anticipated increase in time to feed those cattle if we're feeding that ad libitum diet, which is understandable as we are feeding that diet at a higher volume, and also the diet was more forage based, so it was a little bit drier and more stemmier, so it took more time to deliver that. So then that's all calculated together and gives us a cost of $21.96 to mix and deliver feed to that calf throughout the backgrounding period. And then we have our vet medicine costs. So going through the records, this producer found that their vet medicine drug cost is about $9. So we'll change that. Their marketing costs are $10.50. Their utilities, gas, fuel, and oil is $4. And then the manure management cost or revenue. So if you're selling your manure to someone, or if you have to pay someone to come in and clean out your manure and dispose of it, you'll account for that cost here. This producer doesn't have that, so we'll just leave it blank. And then machine, facility, equipment, and repairs. The producer doesn't have this information, so we're just going to utilize the default KFMA value that is presented there. And then we have the tractor mixer time and usage. So this accounts for the cost that it takes to utilize that equipment. So this $46 is the least cost for the tractor and the mixer, multiplied by the limit fed timing, and then the feedings per day. But again, with the ad libitum, we're expecting a little bit more time, so you're increasing those hours spent. So we have that accounted for, giving us a lease cost of $59.43 per head. And then the final 2 within the variable costs is cash interest paid and other variable cost utilizing the KFMA values that were provided. And then that brings our total variable costs to $304.72 per head. Total fixed cost to $27. So when we add our variable cost and our fixed cost together, giving us a total cost of $331.72 per head. And then finally, we have our income over variable cost of $72.82 per head, and an income over total cost of $45.82 per head. So that's for if we would ad libitum feed those stocker cattle, and then we just go over to the limit fed sheet and repeat the process and then compare the two income over total cost just to gauge that profitability and make our decision for our operation. When we look at the summary tab, we have all of the total gross return, total variable cost, total fixed cost, income over variable cost, and our income over total cost for ad libitum feeding and limit feeding, and then the difference between the two. So the key thing that producers want to look at here is the difference between our income over total cost for the two feeding types. We see that limit feeding provides more profit for this specific example and this producer than the ad lib feeding at $45.82 compared to limit feeding at $123.44 per head, a difference of $77.62. So for this specific example, we see that it is more profitable for a producer to limit feed given the input costs and their feed costs and the feed ingredients and their labor wage and all those values that we input. We get a better idea of that profitability, and then the producer can make a decision for their operation, weighing all of the costs and benefits.
Hope you found those comments from Claudia helpful. As I said, I encourage you to watch the full 20-minute. I'm in the spirit of time and just kind of keeping this presentation focused. I'm just using some snippets from that, so please watch the whole thing. One of the things I want to impress on you is the net benefit for limit feeding is very operation specific. That won't surprise you when I tell you that. You need to use those decision tools to tailor the numbers for your own situation. But that said, it is my job to kind of provide broad context about what are some of the net benefits that we think apply. So I'm going to do that here for a few minutes. So for the stocker segment, limit feeding versus ad lib appears to have multiple benefits. You heard Dr. Blasi earlier talk about some of the production and the feed usage benefits. Those, when we put them into our decision tool, the budget comparison, we see we have higher projected gross returns, primarily because you're going to sell a heavier animal, and you have lower cost, primarily variable cost because of lower feed cost. Well, if you have a boost in revenue and a decline in cost, that is advantageous to profits. And in our base default situation, that corresponds with about a $46 per steer per head in your system profit gain. Now, to drive my point home about sensitivity for your own operation, some of you probably picked up when Claudia was going through, she actually came up with more about a $70 difference or a benefit to limit feeding, given the scenarios that she was walking through. I think it's important to recognize that limit feeding versus ad lib may not be a no-brainer for all operations all the time. Even if you're in a situation to where the net benefit is small under normal operation times, maybe normal rainfall, normal forage cost and availability and so forth, one could quickly envision a drought situation, or maybe you just regionally happen to be in an area where feed availability and forage availability is reduced for whatever reason that might be, to where now it makes sense for you to consider limit feeding. One of the appeals of this is a large part of this could be adjusted over time. It doesn't have to be an all or nothing all the time. And to that point, I encourage you to periodically come back and use these decision tools. And you may find that what was once a small net benefit that may not have encouraged you to change has actually grown over time. So please keep that in mind. As for some preliminary insights from the survey work, and again, this is an ongoing effort. We conducted the survey in April and May. Quick shout out to Beef and Inform and Engage, their research arm. They helped us do this mail survey, nationally representative of the cattle sector, specifically the stocker segment is what we were targeting. Doing that during kind of the heart of COVID was no small task. So thank you for our collaborators there for helping pull that off. And there's several things we hope to gain from that survey data. We intend to document kind of base practices and views. I'm going to give you a couple flavor statistics on that in a second. And ultimately, we hope to shed light on base preferences for limit feeding and ad lib, how changes in cost, for example, will alter people's choices, how changes in average daily gain in one system would change their preferences. That's where Claudia and I are going in our thesis more deeply. At this point in time, we don't have those specific results to share. Look for those posted on Ag Manager, and I'm sure Dale will work with us to post them on ksubeef.org in the future. A couple things to note here. The base, just kind of raw data summaries. 43% of our respondents suggest they currently limit feed. So this isn't new in the sense that there are limit feeding exercises at play. There's different ways to change the ration and maybe tighten it down to even more limiting. I mean, there's really a continuum, I think, in my mind, of limit feeding versus ad lib. Dale and others could speak to that more completely. But it is noteworthy that maybe close to half the industry is doing some version of limit feeding currently, but not everybody. So of those that said they're not limit feeding, I think it's a little bit interesting to take note of some of the comments they provided. The first two I noted here, initial cost and labor, might speak to cost side concerns or viability concerns for their operation of going limit feeding. Those may not be accurate, but that's what's in the mind of those participants and producers when they responded. I put four other ones here that have components about my forage availability and my production system in mind. Maybe to paraphrase, I don't need it is kind of what's in the mind here. Maybe those are operations that have quote unquote excess forage or lower cost forage available in most cases and aren't as motivated to pursue a limit feeding practice. And for those operations, that might make sense. I'm not sitting here saying it doesn't. But even for those operations, certainly over time, forage and feedstuff availability can change. Drought conditions and other things like that can change. So even if you don't make a permanent adjustment, I encourage you to hear us out and be aware of these decision tools if you find yourself in that situation. And at the bottom, I included, one producer did respond saying it does not work, suggesting they've tried limit feeding and it didn't work for them. Maybe they had an adverse animal performance impact. Who knows what that would be. This is a big industry with lots of different participants, lots of animals in this industry. And you certainly are going to have some that adopt something that doesn't work as expected. So that doesn't surprise me. I hope that producer learns from that, maybe tweaks it. And if it's limit feeding or something like it in the future, they learn and benefit from that experience. So what are some take-home economic points from this? On balance, I do think there's evidence that stocker operators can benefit from moving from ad lib towards limit feeding. Some of the core benefits that showed up in the stocker trials that Dale and his team, Morgan and others that you've heard from and get to hear from in other venues, point to higher average daily gain for cattle that are in a limit feed setting and point to improved feed efficiencies. Those speak well to the potential sustainability benefits for this sector of additional adoption of limit feeding. Our Excel-based decision tools peg that as a net value of about $45, $46 per steer for those that adopt limit feeding versus ad lib. Now, hopefully you heard me loud and clear, and if I put an underline here, I strongly encourage you to use our Excel-based decision tools to refine that number. For some of you, it may be closer to $70 like Claudia's walkthrough example came to. For others, it might be closer to an indifferent zero or potentially even a negative depending on your situation. So please use those decision tools to refine your own assessment and ultimate decision. I will also note the first round of trials that were done at the stocker unit. Dale and his team were able to work with prep feeders. So those animals went from the stocker unit eventually to prep feeders and subsequently harvested. Gave us the opportunity to track some feedlot performance. Gave Claudia information to parameterize feedlot parallel decision tools. So what she spoke to earlier and what I highlighted are now on our Ag Manager website. Initial look there is that actually at the feedlot level, cattle that were limit fed during the stocker phase don't perform as well. So there may actually be some detrimental effects in the feedlot segment. I think that's worth additional consideration, additional research in the future. So what is the net impact for the industry is a slightly different question than what might be best for a given producer. And that isn't inconsistent, so hear me out for a moment. The net industry impacts or aggregate for the industry are going to reflect the total percentage of cattle that are in a limit feed setting at the stocker backgrading phase and what the business relationship for the rest of the industry is. So for example, if you have a stocker operation who limit feeds and sells a local auction market where there's very limited information transfer and available for potential buyers, those buyers are buying cattle in a realm of uncertainty, not knowing if they're limit feeding or ad lib feeding or something else was at play. In that context, a feedlot is not going to have the information to make a distinction. The seller from the stocker enterprise is probably not going to get a premium nor a discount for that, and they're going to internalize those on their operation benefits of higher average daily gain, feed efficiency, so forth. Conversely, if you have a relationship where maybe you directly sell to a feed yard, and that's a repeat business relationship, over time, they're going to learn, and I suggest you communicate what is being done, what those limit feeding practices are, and that becomes part of a broader business relationship because you have an ongoing kind of one-to-one relationship, and differences in animal performance that impact on the feedlot side of things is going to be part of that discussion. Moreover, if you have a larger aggregated adoption of limit feeding, we might see increased calls for documenting or requests for that information, sort of akin to animal health information today. So, VAC 45 and other kind of claims, whether it's natural, genetic, breed claims, there's a whole suite of things in the feeder cattle marketplace where some people voluntarily make claims in hope of getting a higher price. You could also see a situation in the future where cattle buyers, in this case feedlots, might seek more information about whether limit feeding was in place or not at the last spot in the life of those animals. We could see that part of the marketplace mature as well, and that will have an impact on the net industry-wide effects of this. So look for those adjustments over time if this practice is adopted further. At this point in time, we see some positives for the stocker segment, some detrimental effects it looks like for the feedlot segment, and what the net of that means for the industry is largely to be determined by those bigger kind of industry-wide, industry relationship, macroeconomic-oriented functions that I'm trying to allude to here. Thank you for your time. I hope you have found this useful. I look forward to, hopefully this next year, we're in person for Stocker Field Day again. I will end by saying there will be a PDF of these slides posted on our Ag Manager website. Here's the specific link for quote-unquote my homepage. You can find this and a lot of other related information there. We put PDFs of these kind of presentations there. Links to the decision tools I alluded to are from there. Things along those lines I hope you find helpful. Thank you for your time.
First of all, a question for Dr. Justin Waggoner. Justin received a question regarding the amount of aflatoxin in distillers grains. Do you start to see a negative impact? At what amount of aflatoxin in DDGs do you need to be cognizant and be aware of potential impacts on performance?
Yeah, so that's a good question. We attempted to address that in the chat to directly back to the person that asked that, but for the larger group at large. So essentially, as we get into any of the toxins, those acceptable levels really depend on the specific toxin that we're dealing with. There are different levels for each one of those independently. So the other important factor with the toxin specifically is that it is an overall diet issue. And so we need to look at those levels in the total diet, which is essentially a function of the concentration within the product like distillers grains and the inclusion level. So typically for me personally, for whatever the specific toxin may be, if it's in the case of aflatoxins specifically, I will go to about 60% in the total diet of what those dietary maximums are. So hopefully that addresses that particular question in terms of what those levels might be.
I received a few questions regarding limit feeding. First of all, bunk space allotment is very critical to be concerned with. Recommend not less than 18 inches allowance per calf. It's very, very important to ensure that all calves have equal opportunity to approach the bunk, and the more timid animals that perhaps would not be quite as aggressive would not be getting their equal allotted amount of feed. So we need to be cognizant of the amount of bunk space that we allow to the animals. The other questions that I received regarding the adoption of limit feeding. We're hearing a lot about it, a lot of interest from our work here in the surrounding area. We're seeing an uptick, and based upon Dr. Tonsor's comments from his survey that he and Claudia have done, I would say that a lot more folks are taking a hard look at it. A couple comments regarding easier transition into the feedlot. I think that's a very important point to take into consideration. And with our work, the coordination with the consulting feedlot nutritionist being on board and being very much aware of how and the manner by which those calves are being fed is very important. But it's conceivable to think that we can shave off at least 7 days, if not 10 days, off the time it takes to get those cattle stepped up to the desired final finishing weight or diet for those cattle as they're being fed. I also had another question regarding if you could limit feed concentrates with ad lib access to hay. in that sense of the word, you're really not limit feeding, and you can provide a supplemental limit feed, say distiller's grains. We've done work on pasture, if you want to look at that as a comparison to hay. And when we're feeding limit, when you're limit feeding, say, distiller's grains at about 5 or 6 pounds, your conversions are about 7 to 1. And if you get much higher than that, then your conversions really start to fall off quite precipitously. Had another question from a colleague from New York, from Cornell, asking about could a person, if they're purchasing calves in, say, February, March, and not going to grass until May, can you limit feed calves? And we have done some work. About 15 years ago, we did the work, and we restricted those calves to about 1.8% of dry matter intake, and we observed a significant increase in compensatory performance while those calves are grazing on grass. I do not have any other questions. I'd like to extend my personal thanks to Mr. Tim Carson, our technical consultant in the department that keeps things going, Miss Angie Denton, Lois Schreiner, Dr. Bob Weber, everybody, including the panelists, Justin Waggoner, Tonsor, Claudia, thank you very much. And last but not least, Mr. Wes Ishmael for agreeing to spend his time with this effort. Thank you very much. And I would like to also, again, remind you that next year, praying for good health for our country and to get this virus under control, we'll have the actual Stalker Field Day the latter part of September. And with that, thank you.